following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's get to Brent in Martinez, California. Hey, Brent, what's going on?
How you doing today, Tom?
I'm doing great, man. You having a good day out there?
I am, thank you. I was really just commenting on the fact that I'm really enjoying the new format with you being there when the market's still open. You've assembled a great group of people. They're all great technicians. And I'm so glad that I first caught you on the radio with your little tiger growl. I'm like, who is this guy? And it got my attention, and it's really made a positive change in my life.
You're awesome, man. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks. Google out what the numbers after the close. It's going to be a good one. Volatility-wise. Don't take anything personally. Ignore the opinions of others. Whatever people do, feel, think, or say, don't take it personally. Others are going to have their opinion according to their belief system, so whatever they think about you is not about you, but it's about them. That's a tough card. This one's that's a wild one. You got to think about that one for a while. Market-wise, let's take a look at it out here. We had the Dow Industrials down 39, NASDAQ up 18, S&P's flat, gold contract up 10 cents, traded at $12.61 an ounce. Silver down a penny at $16.44 an ounce. Platinum down $5 at $9.29 an ounce. Copper up a penny and a half at $2.73 a pound. Light sweet crude up 63 cents, $46.40 a barrel. Notes, 10-year note down 5 ticks, 126.04. 30-year bond down 19 ticks, 154.06. King dollar up 121.6, 93.800. King dollar still can't catch a bid, folks. Bottom line, King dollar making its way down to the 92 to 91 area. The euro is trading at 116.5 to the U.S. dollar. The yen is at 111 to the U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We are at 246.78. Bottom line, anything and everything over 245.01, saying it can go higher. That's one of the breakout areas, folks, from the last week and a half. Dow Industrials, what the Dow has out here right now, we're 21,538. Now, it's going to get intriguing here. You close on the 21,535, that gets you back in the lower range. We've been in the higher range since it broke topside on the 12th of July. The composite, so the NASDAQ composite, NDX 100, that's where the action is going to be come after this close. Right now, it's up $18. You are at 64.06. Bottom line, you're over the 63.41 in a big way. NDX 100, you take a look at the NDX 100. That's up $15. Anything and everything over 58.97, you have to get back inside that area. Now, let's go look at Google, because Google's coming out with numbers, folks, split second after the close out here today, and this is going to get intriguing. So the expected move inside the option market is 4.1%. And what that means, folks, is that that's 4.1 up or down, okay, just a volatility move. That's approximately $36 to $40. That being said, this is where it's going to get really intriguing, and this is what it is. So Google has a high volume high at 1.8 million. That 988. That was established on the 6th of June. Guess what? Google is taking out a small B point of a large ABC structure on the way up. Now the correlation, the bottom of that is 984. The top, the bottom is A is 894. The B is 975. So you're talking about some big action here, man. That would be saying that if, in fact, we get this thing going, you're going to talk about 1,050, and we're at 980. So it's going to be wild watching this thing shake out. It's also coming into the downdraft from the 9th, and that's where it was 3 million shares traded. Next day it was 3 million. The way this is trading right now, this looks to me like it's going to be an ABC structure on the way up. So when you take the aspect that the expected move is 4.1%, which is approximately $36, on top of that, you take an ABC structure with approximately $90 in it, you get $1,050. It looks to me like after the close out here that you'll have the index go higher. Gold contract. What do we have with the gold contract? Gold contract out here trading at a price point of $12.61. You get a low out here today of $12.58. You get a high of $12.65. Bottom line, it's making its way into the swing area from the 23rd. The high of that is $12.67. I expect what you're going to see here. It's going to, and it has the volume behind the move. This thing wants to get up into this 1305. Now, that being said, when you take a look at the XAU and the HUI, what you're going to see is that they're driving these babies lower. You get the XAU down $1.75. That's trading at 81.88. The Gold Bugs Index. You take a look at the Gold Bugs Index. Gold Bugs Index is down 411. We take a look at Barrick Gold. And Barrick is the culprit out here, folks. Barrick started the deal on the way down. Barrick right now is down 76 cents. You're at $15.42. That is the largest weighting structure in both the XAU, HUI, GDX. And what's happening with Barrick is this, folks. They have a company in Tanzania, huge gold company. Bottom line, they have a huge fight with the Tanzanian government. They got a $190 billion tax bill. They shut the mine out here this morning. So bottom line, political risk, huge. No two ways about that. The bond market, we take a look at the bond market. What we have with bonds out here is this. Bond market right now is trading, the 10-year note is trading 126.04. You've traded 531,000 contracts. So you're moving sideways with light volume. After going topside last week, this bond 10-year note wants 127.08. 30-year note, same type of setup. 30-year note out here today, 120,000 contracts. You're at 154.07. That also is trading sideways. Bottom line, this wants 157.08. And King Dollar, what do we have with King Dollar? King Dollar still can't catch a bid, folks. You have 12,000 contracts today. Your low is 93,650. We're at 93,790. You take a look at this contract, you put it on a weekly basis, and what you're going to see is that for 6 months now, hasn't been able to catch a bid. We are going after the lower part of the consolidation. The lower part of the consolidation is approximately 93,155. Today we hit 93,650. I expect we're going to hit it, number one. The real question is going to be, does it hold? And there's not a lot of support here, by the way. You know, we've only been down here 3 times since March of 2015. You don't hold at that level, you're going to go to the 88 level, and that's some real fireworks. The Fed meeting, we have a Fed meeting this week. They don't expect, well, the market doesn't expect them to put up short-term rates. The statement's going to be on the 26th, which is Wednesday at 2 o'clock. You stay right there, folks. We're coming right back. Our phone number is 877-927-6648. Dow Industrials is down 42. Nasdaq's up 21. S&P's are flat. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now down 40. You get the Nasdaq up 23. S&Ps are flat. Let's go over to our man, Mr. Steve Rhodes, as we do each and every Monday at 20 past the first hour. Don't forget, folks, Steve has a great show right here at TFNN every trading day, 1 to 2 Eastern Standard Time. Also has a great newsletter. You can test drive this newsletter by coming over to our website at TFNN. You go to newsletters. You go to trading newsletters. You see Mastering Probability. You can test drive it 30 days absolutely free. Steve Rhodes, what's going on?
Well, I can tell you that Mastering Probability subscribers are happy with your call on Google. So from your lips to the trading gods.
Oh, yeah?
And the reason is, I'm glad you talked about the newsletter. Normally when I do this segment, I just take a look at other things and really talk about the newsletter. But just to lead into what you were taking a look at with regard to Google, and because of its weighting structure inside of the NDX 100, I thought what I would do is, for this segment here, just share with you and viewers and listeners what we actually do inside Mastering Probability. And this here, Tom, takes a look at the current positions that we are in.
Yes.
So from a newsletter subscription standpoint, we went long the NDX 100 on July 5th, and I'll show everybody the reasons why we did that. And we're also long gold as well as the gold miners. Now, for those folks that actually trade the QQQ series versus the 2-time or 3-time ETF, that combined with the GLD and the GDX, they would be 100% invested with regard to their funds just in those instruments. But others trade the 2-time or the 3-time, and in that case they're not fully invested. What I want people to notice here, and really what it is that I do, is really focus on position sizing.
Yes.
In fact, new subscribers to my newsletter service get about a 45-minute workshop on position size. And I think it's one of the most important elements of trading and investing. And folks, what I mean by position sizing is the one thing that we can control. Tom and I can't control what Google's going to do. We just use different technical tools to help assist us as to what the market's communicating to us now. Come back at 4:15, we might have a different thought process on that. But we just go with what we have now. But what we can control in the marketplace is our loss, is our risk out here. And to me, that's the most important thing. So Tom, what I do for each trade that we put on is determine we typically don't risk more than 1%. In fact, you'll see in the column here, I've got a risk percentage. It's the fourth column over from the right-hand side, and you'll see that we took a 1% risk in the NASDAQ 100, and then 1% which we split in between gold and the GDX. When I got a turn signal there, it wasn't clear to me which of the two would move the most. Turns out that gold has reacted better, and I think you covered that pretty well because of the weighting structure of Barrick Gold inside the mining.
Yes.
That's pulling down the GDX. So I'm glad that we did that. And what we do is I take a look at make it easy for subscribers to think of in terms of $10,000 of free trading capital and identify exactly how many shares per $10,000 in trading capital they should buy at the time. So in the Qs, as an example, it was 35 shares per 10 grand. It was 40 shares in the QLD and only 17 shares in the TQQQ, the three-time ETF. And what we did there, we knew that on $10,000, 1% risk is $100. 10,000, 1% times your total available trading capital. And then you just simply take your stop. And for stops, I take a look at the average true range of what the stock. Now, it's different today than it was on July 5th and July 11th for each of these individual equities. And then I multiply that times the Fibonacci expansion. And that helps us identify what our stop is going to be. We take the $100 divided by that, and that tells us how many shares. Now, the cool thing is sometimes people get caught up into the profit percentage. So what you can see here is in the Qs, you would be up, as of yesterday or Friday's close, up 5.5%, the QLD 11%, the TQQQ 17%. But the reality is if you took the actual profit per share, in this case here, what you would be up is you would be up about exactly the same in actual dollars out there. So this allows people to, and I like to keep people. So it's really important, I think, for people to understand. When people trade the doubles and the triples, sometimes they just let position sizing go out the door. Say, hey, the equity is $95 in the TQQQ versus 136 in the Qs. I'm just simply going to go buy more shares. And what that does is that messes up the position size and increases the risk there. But you can see that the risk reward factor here, nearly about 2.4 for each of them. And if you just multiply $16 times, that's the profit in the TQQ times $17. It's basically about the same dollar as $7.54 in the Qs times $35 out there. So it's an important element, and this is what subscribers would get. And when they get the alert message, whether it's by Twitter as well as by the newsletter, then they know, in their mind what they've got in their portfolio. It becomes easy for them to go out there and do. So for folks that aren't familiar with position sizing, come on over, check out the newsletter service, go through that 45-minute workshop. You'll find that it'll make a substantial difference in your life. The other thing, Tom, that I do for subscribers is I provide them with an overall market outlook. Most portfolios, longer-term portfolios, have a mix between equities, between bonds, and between commodities. And so what I do here is I take a look at the S&P 500, of which from a long-term standpoint and an intermediate-term standpoint, we're bullish. Inside the daily newsletter, I give people guidelines as to where price is likely to find support or resistance for the intraday traders. But for the majority, for the longer term, managing their longer-term portfolio, I give them a long-term and an intermediate term type of time frame. So the S&P and the for both those time frames were bullish. The same with regard to gold, long-term and intermediate-term time frames. And I give them certain levels to be watching because if we were to see a close below a certain level, that would be a signal, if our stop hasn't been taken, that we're going to change our stance on our position, and bonds as well. Now, the cool thing is I started doing this back in the middle of March 15th. And these signals started being picked up by the folks over at Timers Digest. And so now, as you know, because you've been a leader in Timers Digest in the gold market for a long period of time out there, you know that the way that they operate is they rely upon, you need 12 months worth of data before you start getting published with regard to all of the other individuals that are out there. So just out of curiosity, after about 3.5 months, I sent an email just to ask the question of, hey, where do I stand after the first 3 months. And this is the email that came back, which was pretty cool, because for those 3 areas, the S&P 500, gold, and for bonds, I ranked number 3 amongst their entire group of newsletter writers out there in the S&P 500. Number 1 when it came to bonds, and number 3 when it came to gold. So this is the type of information.
Sweet.
Yeah, this is the type of information that subscribers would get. We went long, as I mentioned, inside of the in the NDX 100, and it was because of this Gartley buy pattern. You know, thank goodness for you and Larry, who actually taught me about this pattern, and then other tools and techniques that I put together. And as soon as we got the bullish reversal signals, we were long this, anticipating that this could turn into another A to B equals CD to the upside. You had mentioned a figure inside of Google, so we're thinking along those same lines out there. I actually, as you know, have a much longer term view of where the NQs are headed to. But right now, my initial intermediate term target is about 62.95. So I'm pulling for Google.
Yeah, there's no doubt, man. And listen, folks, come over to our website at TFNN. You go to newsletters, go to trading newsletters. You can master probability, test drive it right here, right now, 30 days, absolutely free. Steve, thanks so much. Look forward to the Google numbers, 4 o'clock, man.
All righty, take care.
Okay, stay right there, folks. Come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. So Google's after the close today, folks. We take a look at Amazon. Amazon is going to be on the 27th, so that's going to be Wednesday. That is at 4 o'clock. Facebook is going to be, let's see, hold on. Today's the 24th. Yeah, Facebook is Wednesday. Amazon is Thursday. Yeah, Facebook's Wednesday, Amazon's Thursday. Right now, Amazon is at 1,041, and that also is breaking topside, man. What a trip this is. Yeah, no, it's getting away from its 1,016 area at 1,041. Facebook has been hitting highs every day. Hey, Facebook is up $1.55 right now. That's trading at 165, and when you even just bring this back like 15 trading days, it was at 148. So that's going to get really intriguing, no doubt about that. When we do look at Google, as I said a little bit earlier, the expected move inside the option market is 4.1%. So approximately $38 up or down. And what you have here is that Google has 1.9 million shares right now. You're taking out 1.6. What you're not taking out, and this is where this is going to get, it's pretty intense actually, is that when we came down off the high at 984, this thing got crushed. Did 3 million shares. So in that context, it's like, okay, that isn't the high, because your high is 988. Your volume there is 1.8. You're doing 1.9. You get the ABC structure. It looks like good old Google wants to do that ABC structure on the way up. We go inside the Dow Industrials today. We take a look at the strength versus the weakness out here. So the move is inside the Dow out here today. The strength is Apple. Even though the Dow's down, Apple's putting 12 positive points. Caterpillar's putting 9. Travelers Insurance 9. Taken away from it, Johnson & Johnson is the culprit. That's putting 13 negative points. Home Depot's putting 12. Goldman's putting 10. Big Mac is putting 10 also. We get into the NDX 100. We take a look at the strength versus the weakness out here. Strength is Tesla. It's up 3.8% or $12. Wynn Resorts is up 3.3, $450. Baidu is up 2.7 or $5. Intuitive Surgical is up 2.5 or $23. Taken away from it, the toy companies are getting smacked around. Hasbro's down 9.2%. That's Dragon Mattel down. That's 3.7%. You got Dollar Tree down 2.4%, and Ross Stores is off 2.3%. We go over into the XLF. So you had all the big banks come out with numbers last week, folks. Bottom line, they couldn't catch a bid. And the numbers, it's the second largest. This was kind of really interesting, actually. It's their second largest profits ever. So it's like, okay, bottom line, whatever is inside that banking structure, folks, the market still is saying, you know what, I'm not going to bid them up. I'm not going to break them out, all of the above. You get the XLF up 12 cents at $24.92. If we go take a look at JP Morgan, which had actually kicked off the banking structure, that is at $91.43. That's down from the swing high of 94. We go into the XLE, the energy sector. Energy sector out here, the XLE is down 21 cents today. You're trading at 64.90. That's 64.90. Also, we had a high last week at 66.56. That was coming up to the top of the range. Couldn't handle price. Comes back down the other way. What I expect you're going to see here is 63.64, which is like at the $63.64, is the bottom of this little consolidation we've been in for 2 weeks, and it looks like it's going to get hit. Yeah, so if we go to Chevron, take a look at Chevron. Chevron is quite weak compared to, you get Chevron and Exxon that are the movers inside the XLE. Chevron right now is flat. The lower end of this Chevron, though, is 102.55, and right now we're at 103.21. Exxon Mobil, we take a look at Exxon. Exxon is down 28 cents, and we are at 79.84. Yeah, this is really dangerous. Wow, this is actually Exxon caught up with Chevron pretty quickly. We put this back. These things are looking to blow out their bottoms. And the bottoms that we're talking about here, these have been in place. This consolidation has been in place going back to February of this year. But it looks like it wants to blow them out, get down to the next level. And what oil stocks love to do, folks, is that they trade in large consolidations for long periods of time. So it's really cool, if you like, I happen to like trading them, but if you really want to watch how a consolidation moves out and how long consolidations can last. And it looks like right now that these oil stocks want to break the consolidations in. And if you get that, then they'll set up a consolidation, and that consolidation will be down the next floor. Because down the next floor, then you'll probably get another 5 to 10 point consolidation. Because if we go over to the ExxonMobil, what you're going to see is that let's see if I put this up. I'll put this up for 4 years. And what you're going to see is that we traded, actually I'll put it 5 years because it looks like we traded in one of them. Yeah, so we traded in one consolidation up at highs between November of 2013 to January of 2015. That consolidation was laid out at 104, 105 to approximately 90. This consolidation here that we've basically been in, we've been in this consolidation since April of 2016. You know, your high end there was 95. Your low end is right where we are right now, $80. You know, so they trade in wide consolidations, which is pretty cool. The GE came out with numbers last week. They were a mess. They continue to be a mess. GE's at $25.37. This thing is building cars to get into its high volume low, laying out here at like, well, the top of that is $25.17, which we're just about there. The bottom of that is going to be the problem. The bottom of that is laying out at $19. So this is a classic, meaning that it came right up to ice. You know, GE was a $60 stock in 2000. In 2007, it was a $42 stock. And 2016, July of 2016, it had made $33. You can see consecutively, it hasn't been able to get to a higher high. And what leaves that wide open. So first off, what happens is that your high volume low wants to get tested at $20, $19. And if that comes down with volume, then it's trouble in paradise. Because what this does have is the high of the low of 2009 has volume. You know, so it's like, okay, you're really going to go to $11? Well, they can. There's no two ways about that. Home Depot. We go take a look at Home Depot. Home Depot got whacked around last week, big time. It went from a price point of $152 to $145. I guess the key there is that it was hard to tell whether it was Sherwin-Williams, the paint company that come out, or it was the fact that Amazon's going to start selling appliances. Bottom line, they sold the heck out of it. That being said, you're down $1.85 today. You're at $144, and this is a normal retracement in a market that's just, I mean, when you look at Home Depot, we went from $28 in August of 2011 just straight up to $160. So I suspect that I wouldn't be buying this thing right now. I think $131. Right now you're at $144. You stay right there, folks. We're coming right back. 877-927-6648. Let's get over and take a look at Google. Google is at 983. It's at its high for the day. It looks like it wants to run right up into this high as we are coming into the close in the next 20 minutes. So we're going to be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR. David White has just announced a new online course that he'll be premiering to his subscribers the evening of July 26th, The Next Wild Wild West of Computing. Machine learning will be the biggest growth area for tech companies in the next 10 years. Make sure you're ready to capitalize on that opportunity. With over 50 types of algorithms and growing, Dave White will tell you why there are so many areas for companies to apply this to their business to both sell and consume. Right now, you can get a 30-day free trial to either of Dave's newsletters, Path of Least Resistance and The Technology Insider, as well as get a 30-day money-back guarantee when ordering Timing the Trade charts. Don't miss out on the next Wild Wild West of computing as it premieres July 26th for all subscribers to Dave White Services. For all the details and to sign up today, visit the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. Dow right now is down to 34. NASDAQ is up 28. S&Ps are up a half a point. Now, this is pretty intriguing what we had happen out here today, folks, inside the T-bill market. So T-bills, anything under 10 years, folks, is called a bill versus a bond. Well, no, under 5 years is a bill. Notes are over 5. So this is what you had happen out here. Buyers strike stymies T-bill sale as debt ceiling anxiety rises. The Treasury Department got a clear message from investors today that they're starting to get concerned about another showdown over the United States debt ceiling that may get ugly. I'm reading a Bloomberg note right here, folks. The government's auction Monday of $39 billion of 3-month bills attracted the lowest demand of any other sale of the security since June of 2009. That's serious business, folks. The bills, which mature around when the Treasury is estimated to run out of money, unless the lawmakers agreed to extend the statutory limit on the nation's borrowing, were sold at a rate of 1.18%, the highest since October of 2008. Think this is pretty intense, folks. So picture this. You get 90-day paper. They won't buy it because they don't want to get in the middle of the political showdown. Watch this now. This is intense. You know, it hasn't affected the longer ones, but the short-term notes, cash flow, big time. The uncertainty led to a buyer's strike in the 3-month sector, with investors demanding that the securities at a yield 2 basis points higher than where they were, 2 basis points higher than where the issue is trading before the sale. The auction's bid to cover, which is really crucial to understand, that means the amount of demand there is versus what the supply is, which compares the number of bids received to the amount accepted, plunged to 2.87, equaling the lowest since June 2009, versus a 6 auction average of 3.14. Indirect bidders took 34.8%, the largest takedown since July 3rd, though combined with the tail, it's not a strong indicator of buy-side demand. 3-month bills are yielding more than 6-month securities as investors shift into the other tenors of the Treasury bill curve. The curve inverted on July 19th and is at around a negative 6 basis points. The most recent debt ceiling showdown, which was accompanied by a government shutdown, was October of 2013, which had relatively limited impact on the markets aside from some moves in the bill rates. The political fight that led to the 2011 debt limit saga prompted the S&P Global Ratings to revoke the United States' AAA credit rating. So bottom line, folks, is that inside the bond market, when you do have something like that going on, the bond market is saying to the politicians that the bottom line is that we don't trust that you are not going to have a take me down big fight, and we're not going to give you money to play with in between that. Because, see, this is what ends up happening in the 90-day, is that risk-wise, the traders themselves know exactly what they're going to get. They're supposedly always going to get their money back, right? You're going to get your money back. You're going to get your 1.1%. Because of the 90 days from now, when they're actually expiring, the traders are saying, you know what, I'm not going to take your 90-day paper because I don't want to get involved in that. I will go out to 6-month paper, and that's what's going on, is they're pushing it out so they don't have to get in the middle of, are we going to get paid? Are we not going to get paid? What's going to happen? And what has happened in the past, the last shutdown, everyone got paid, but the bottom line, because the Treasury didn't have to pay it out, they took it from another spot when the government got shut down. What ended up happening, instead of paying the government workers, that's why the government got shut down, the debt structure, all the debt structures were paid. And they, you know, until they upped the limit again, the bottom line is that that's how they did it. Now, the bond market is saying, well, I'm not going to get in the middle of that, because what if they don't do that? 877-927-6648. Let's go and we take a look at good old Walmart. Walmart versus Amazon out here. So Walmart today's up 78 cents. That's trading into the gap. The gap we're talking about is a Walmart gap down on the 15th. It had closed that day at 78, opens the next day at 73. We are at 76.91, and if it stays there, it looks like it can, get up and try to get into this $79, and right now you're at 76. We go take a look at Lowe's. Home Depot had got whacked on Friday. We go take a look at Lowe's. What you're going to see. That's trading $74.38. And we'll see whether it can get some juice. This stock's down from 86. It reached 71 on Friday. This is a large consolidation, but you're down. Well, it was interesting. It would have been better if Lowe's actually got below 71 before it started bouncing here. So it looks to me like you get a large consolidation. The bottom of this consolidation is $70.65. So I don't think Lowe's is done getting into lower price. Boeing, let's go take a look at the Boeing. What you have with Boeing out here. BA, they come out with their numbers, let's see, Wednesday also. Wednesday at 7:30 in the morning. So Boeing's trading $212.64. This is all-time highs. Yeah, this stock looks like it can take a big hit. So this is going to be intriguing watching this thing, right where, when they come out with numbers. This has been also a one-way shot. 2009, the stock's at 31. It's almost a 10-bagger. 9, 3, yeah, it's an 8-bagger. Pretty intense. That being said, we've been up. This thing has been up for a year on basically air. It pays a 2.67% dividend. We go over and we take a look at Verizon. Verizon's also going to be coming out with numbers on Thursday. Verizon right now this pays a big dividend. That pays a 5.29% dividend. And this is down from a price point of 50. You got a sign of strength, though, last Thursday. So we'll see where this goes. That was a small sign of strength. Goes up a couple bucks, 43 to 44.58. You're pulling back. You got some light volume on the pullback. Bring this back further. Yeah, it's a consolidation also. Yeah, this looks like it wants to go 42.50. The lower end of that's the lower end of that consolidation that it's in, trading out that 82.50 mark. Let's go take a look at the silver market. Silver out here today, trading at a price point of 16.46. We have volume of 60,000 contracts, which is good contract volume. And yeah, silver, I mean, the next swing point of silver is $16.91. Looks like it wants to take it and run up into this $17.80 price point. You stay right there, folks. We'll be coming right back. And of course, at 4 o'clock, we're going to have Google out with numbers. And Google, no doubt, is going to affect the NDX 100, folks, because Google comes out a second past 4. NDX futures don't close to 4:15. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go over to Google because I want to show you something on Google. So this is going to, folks, if you haven't test drove the Nadex platform, great time to do it. Come over to our website at TFNN because what you're going to see is that the futures are going to be moving from 4 to 4:15. Now, what Google's just done is this. So bottom line, Google got to a high today of 986. Now, when we were just, this last hour, when I was just on the air, when we started the hour, it wasn't even close to the high. What this has just done, it got over the high of the downdraft, which was the 984.50. It's going to close underneath it. So bottom line with Google, this is going to be wild watching this shake out. Bottom line with Google, is that you have a small ABC structure on the way up. And when I started the program, I was saying, okay, which one you're really going to pay attention to? You get the ABC structure on the way up. At that point, what it hadn't done, it hadn't got to that high of 984.50. It rushed up to that level. Guess what? It gave it up. So my take on Google here is that it actually will go lower. So this is going to be, I love these when you're going to know in 5 minutes. And this is going to be really intriguing because, yeah, I'll show you intraday how it happened here. So intraday, so let's see, right there. When I started the program, Google was at 979. It ran to 986, tested the downdraft. It looks like it's going to close underneath the downdraft. Bottom line, let's test. Light of volume, rejection of price, and we're going to find out real soon. And what's cool about this one, you're going to find out what one is operating. Is the small ABC, well, it's not a small ABC up, that would be a large ABC up. Is that operating, or is the high that was in place operating? So we're going to know very quickly. And as you go over to the NQs, because this is going to affect the NQs either way, and remember, inside the option market, there's a 4.1% expected move. And the expected move means just flat out that you have option traders trading both sides of it, and you just take the amount of Google, where it's at right now, you say, okay, so 4% either way of basically $1,000 is basically $40 either way. So we're going to know very quickly where Google is going to be and where that will send the NQs, because what happens is the NQs right now are trading at 59.44, and a $40 move inside Google will take these NQs up or down about 10 to 12 points, like in a heartbeat. So it's really cool when Google comes out. And we'll find out. And normally, so this is what's pretty cool too. Normally, folks, the expected move inside Google at earnings is normally 5.3%. So what has happened is that that's actually come down percentage-wise, not gone up, even though the price structure has gone up so dramatically. If we go take a look at the volume out here inside the NYSE, you've got 486 million right now. They'll throw a couple hundred million in there, so we'll do about 650, 700. Inside the NASDAQ composite, let's take a look at it. Inside the NASDAQ composite, you are running 1.5 billion, so that'll be a good 1.8 billion. We take a look at the Qs. We have with the 3 Qs right now. 3 Qs up 62 cents. You're at 144.73, and the Qs, anything over this 143.90 is saying, hey, guess what? You can get higher. What is intriguing on the Qs, and this is another indication that Google wants to pull back, is that the Qs actually got over its high of last Thursday, and you're only at 20 million shares versus the 36 million. So guess what? We are going to know in 2 minutes. You stay right there, folks. We'll come back with those numbers for you. Dow Industrials right now down 42. NASDAQ's up 26. S&P's are flat. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Everyone's having a great day, safe day. Let's make it a great night, folks. Don't make assumptions. Assume nothing. In any type of relationship, we can make the assumption that others know what we think, and we don't have to say what we want. We assume they're going to do what we want because they know us so well. If they don't do what we want, we feel hurt, and we think, how could you do that? You should know better. Market-wise, let's take a look at it out here. We had the Dow Industrials down 66, NASDAQ up 23, S&P's down 2, gold contract trading flat, $12.61 an ounce. Silver up 8 pennies at $16.46 an ounce. Platinum down $4 at $9.31 an ounce. Copper $2.74 a pound. Light sweet crude up 64 cents, $46.41 a barrel. Notes, 10-year note down 5 ticks, 126.04. 30-year bond down 19 ticks, 154.06. King dollar up 131 ticks, 93.810. The euro is trading at 116 to the U.S. dollar. The yen is at 111 to the U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You have a SPY that's at a high. You're trading sideways today, 246. Bottom line, let's get right over to good old Google. Why Google? Google just came out with numbers. We were talking about Google, and this is quite a classic, folks. You know, you had two different things happening with Google out here. It was taking out a small B point, intraday. Bottom line, we got on the show at 3. Bottom line, what did it do? It went up and tested the downdraft from the 9th. That downdraft being $984 million, $984.50. It failed. It failed on price, failed on volume. Bottom line, when I had started the show, bottom line looked like, okay, ABC structure up. But guess what? Right into the close, 10 minutes into the close, it, number one, went up to that area, tested it, failed on price, failed on volume. Google closed at 980. Bottom line, right now, you're trading 956. And when Google did come out with numbers, that little baby went from 980 up to 994, messed around about 15 points up for a bit, then went south. And the expected move on this was 4%, which is approximately $40, and we'll see if, in fact, that's what we get. Right now, it's 953. We take a look at the numbers out there. The estimate was $4.45. They made $5.01. So bottom line is that they made their numbers. There's no two ways about that. We'll see what else is inside of there as we go through the show out here today. Now, what that did do, if we look at the NQs, we were talking about, if you're trading the Nadex platform, folks, Google is one of the equities that can move the NQs, and they can move them very quickly. And what you're going to see is that the NQs, we went to a price point of $59.54. So at the 4 o'clock close, folks, we're at $59.45. We went all the way up to $59.44. Right now, you're at $59.31. What does that do? That presents nice opportunities, whether you're a bull or a bear, inside that Nadex platform. The failure now, when we talk about, let's see, so we're down at, now if we take a look at, let me go over to Google again for a second. So now what you have, you failed at price and volume at the highs, and so that sets up a test now of 915. And right now, you're at 952. So we'll see where the rest of this shakes out. What we will have is that the next big number coming out, and this is a big week for the NDX 100. The next one's going to be Facebook. That is going to be on Wednesday at 4 o'clock. And then Amazon is on Thursday at 4:01. So there's going to be some big high volatility inside the NDX 100 this week. If we go take a look at the 3Qs, what you're going to see in the 3Qs, 3Qs closed at 144.77. That was up 66 cents. Right now they're backing down. They're 144.36. And we'll see in the next few minutes where Google does trade, because Google, price sensitive wise, can be all over the place in a heartbeat. Normally what does happen, though, is that as things settle down, which we're 11 minutes into it right now, it looks like it's going to settle out somewhere about 950, down $30. And 87. Okay, so let's go to the bond market. So let's go to Dow Industrials first. So Dow Industrials, what Dow also did today, Dow closed inside its lower range. $66. That wasn't a lot. There's no doubt. That's almost like a sideways move. But what you did have is this. You're 21,513. Anything under 21,535 sets up a run to 21,197. The composite, even with Google down, has to get a lot lower to get to lower price, because the composite closed at 64.10. You got to get back inside 63.40. NDX 100, which will get some negative downward pressure here, still has quite a way to go. We're at 59.41. That has to get, that's not that much, actually. It needs to get down 43 points in order to get to lower price. It has to get back inside 58.97. The note and bond market continue to say they want higher price, low yield. We went sideways today in the 10-year note, down 5 ticks. Dramatically light volume. We're talking about only 550,000 contracts, 126.05. That baby wants to run up to the highs of the 14th of June, which is 127.08. 30-year, same type of setup inside the 30-year. 30-year right now is at 154.06. You did contract volume of 121,000, which is very light. 127.08 is the number. And if we go take a look at King Dollar still can't catch a bid. Pretty amazing watching King Dollar. King Dollar was up $100 today, 136 ticks. You're at 93.815. This baby is making hay down into the price point of 92 to 91. And what we will have on Wednesday at 2 o'clock, you're going to have the Fed announcements. The expectation inside the Fed Fund futures rate is that is a zero expectation of a 25 basis point rate hike. So I suspect what the market will be looking for is that what is the statement period. Google right now closed at 980, trading at 954, and bottom line. The expected move, actually, if you did from the top to the move, the top of the move to the bottom of the move, I guess, we did get a 4.1% move. It's approximately $40. And Google right now, as I said, the first reaction is that Google was up. We went up to the price point of $9.94. I see $9.94, $9.95 going by. Now you're at $9.58. This is Tom O'Brien. This is TFNN, folks. You stay right there. We'll be coming right back. Dow Industrials closed down 66. You had the NASDAQ up 23. S&P's a flat. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So let's look at the Google had numbers, man. They had big numbers too, by the way. So if we take a look at it, bottom line, they're still trading the stock down. But if we take a look at Google, this is what you have. Their paid clicks were up 52%. Is that me? Their revenue is 3.09 billion. Their cost per click was down a minus 23%. So that is going down. They had other revenue of 248 million. They had other operating losses of 772 million. They don't break those out. Advertising revenue was 22.67 billion. Imagine, just think about that. 22.67 billion, folks, in 90 days. Pretty amazing. Their free cash flow was 4.75 billion. Pretty intense, no doubt about that. If we do take a look at that, which you still have. Let me pull this up again. Sorry about this, folks. You're at 953. That's what Google's laying out, 953. Okay, so now let's get over and we'll take a look at let's go take a look at a few of the other high-tech stocks. This will push them around a little. Okay, so Apple closed at 152. That's still trading 152. Let's see if it did anything with Facebook. Okay, so Facebook's trading down $1. Facebook was closed at 166. That's trading 164.91. Let's see if Amazon was affected at all. Amazon closed at 1,038. Yeah, that's down $3. Big deal. It was up $13 today, but you know. And as the Qs are down like 35 cents. Yeah, so they went up 66 today. They gave back 35. The Qs would have to get back inside the 143.90 area. And it was the failure of the downdraft from the 9th that did them in, folks. So if we go over this just for a second, what you're going to see is that the Google would have been a lot better off if it didn't go up and test its actual high, because when I started the show at 3 o'clock, it was only at 980. And at 980, it looked pretty good, because what was happening is that it was taking out the swing point of last week. It was taking out the swing of last Thursday. And so when you look at that, it's like, okay, taking that swing point out, very well could have been an ABC structure on the way up. And then what you had, as we kept getting closer into the close, guess what? It went up, tagged the downdraft, 984. It went to 986. And as soon as it got to 986, if you're watching Tiger TV, I'll show you intraday exactly what you had. You had the spike from 984 to 986.20, and within 5 minutes, it came off that spike and went down to 980. That's a classic, folks. And what that classic is that what the market was looking for, are there more buyers over there with stops over there? And guess what? There was nothing over there. There was no more buyers over that level. And so bottom line, what ends up happening? Pull back, and now we'll see where this shakes out tomorrow morning. 30 bucks in Google's nothing on the way down. That's the bottom line. But that will, and it did affect the NASDAQ futures. Let's go take a look at some of the higher volume stocks out here. Actually, let's go look at the NASDAQ volume for a second. So the NASDAQ volume, we did 1.7 billion. Some of the higher volume stocks out here today. Put this inside the S&P. Okay, we had Bank of America up 11 cents. Ford was down 24. General Electric got hammered. That was down 48 cents for only a $25 stock. Halliburton also got hammered. That was down 187. So Halliburton come out with numbers this morning. And this is going to be really dangerous for Halliburton. Halliburton down with price, has a wide price spread, 7 million shares traded. Your low in Halliburton for the last 6 months is 41. The high is 58. And this is going to go after it. This is going to, this is going to go after this swing low of 41.37. If we go take a look at we'll stay with the high volume stocks for a second inside this market. You had Microsoft down 19 cents. Wells Fargo was up 10. You had Facebook up $1.57. Nvidia. Let's go take a look at Nvidia. That was down $1.95, which is nothing for them. Now Nvidia don't come out with their numbers until August 10th. This is one of the ultimate high flyers inside the tech business. When you go back and we just look from May, the stock's trading at $102. You're at 166. And you still have volume up until until 166. So this baby, likes higher price, has volume up at higher price. Growth-wise, we're dealing with monster growth. So this year, folks, they project 2017. They project 6.9 billion in business. They did 4.7 billion 2 years ago. And next year, from this year to next year, they expect to grow to 8.3 billion. So they're talking some numbers out here, man, big time. And of course, what's interesting, I was going to say that Asia Pacific is all the business, but that would make sense because it's 4.9 billion out of that 6.9 billion. But what that is all about, of course, is that's where all the computers get put together. So it's not that they have to sell them; they sell them into that market in order for those computers to get made, to get shipped all across the world. 877-927-6648. Let's go take a look at the GDX. So inside the GDX out here today, folks, you're down 36 cents, 44 million shares traded, and it looks like the GDX wants to get into 2165. Right now you're at 2205. If you're in this market, what this move started on was ABX, Barrick Gold. Barrick was down 76 cents. Trading $15.13. Now, good old Barrick's in trouble, and this is what you have. So, the lowest swing point in Barrick is 15.28. Now, the cool thing would be that, you come off this small consolidation, you had volume, and you didn't hit the swing. That being said, the way that this is coming in, meaning with juice, it looks to me like Barrick can go to 13.80. And what this is about is that one of Barrick's subsidiaries, which they're wholly owned, meaning it's a monster mine in Tanzania, Bottom line, they have a fight with the Tanzanian government, and the Tanzanian government fined them today, let's see, $190 billion. $190 billion, one of the headlines for folks that, did go forever. So, let's see. It's our City of Mining tumbled to the lowest in almost 17 months in London trade. It's a London-based company. As the company said, it may be forced to shutter its flagship mine in Tanzania after the government banned the export of gold concentrate. The stock fell as much as 12% to 248 pence, the lowest since February of 2016. This company's been in a dispute with the government since Tanzania issued a surprise ban on concentrate exports in March. The situation escalated when the country accused the company of operating illegally in the East African country and said mine operators had been evading taxes. Given the scale of the cash outflows, we do not believe the situation is sustainable at that operation beyond the end of this current quarter. You stay right there, folks. We're coming right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And if we go take a look at a few more numbers that are going to be coming out tomorrow morning, we get a couple big ones. You have Biogen. That's going to be, of course, in the IBB, the biotech market. That's coming out at before market open tomorrow morning. Before market open inside the gold business, Newmont is coming out. We have, let's see, AXE. Let's see, you got AKS Steel is coming out before the open tomorrow morning. Big Mac, McDonald's coming out before the open tomorrow morning. Oops, let's go down. Whoops. Back. Freeport McMoran's coming out tomorrow morning before the open. JetBlue is before the open. Lots of numbers before the open. DuPont is coming out at 6 o'clock in the morning. They give the actual time they're coming out. 3M's coming out before the open. Oh, this is going to be a big day tomorrow. Sirius Satellites coming out before the open. Caterpillar's coming out at 7:30 in the morning. You have GM coming out at 7:30 in the morning. Pace Cars coming out at 8 o'clock in the morning. HCA, Health Business, is coming out at 8:30 in the morning. Then if we go into the afternoon, this is a big day tomorrow, folks. You get big action all day tomorrow. After the close tomorrow, we're going to have, let's see, Ma Bell is out after the close. You got FCB, I believe that's one of the banks. Let's see what this is. Yeah, FCB Financial. That's it's a community bank in Florida. I knew I see that around. NWE. Northwest Corporation, that's in the energy business. Yeah, so there's let's go over to the BIIB, the biotech, for a second. So this baby's coming out at 7:30 in the morning, Biogen. So Biogen closed today at 284. Yeah, this has a high volume high it's trying to get after is 291. So I expect that baby will try to get up into that 291 area. That's the way that's looking right now. Let's go look at GM. GM's coming out before the open tomorrow morning. GM's trading $35.82. That came up to where it broke down from in March. Right now you're at $35.82. Yeah, that doesn't look like it's going to be a good number on that. I mean, GM can get into about $33.45 in about a heartbeat. SANM, Sanmita, I believe, just come out just now. So Sanmita closed at $42.45. That's trading 38, so that's trading down $4. Now, this is a contractor, folks. Sanmita puts together just thousands and thousands of products, system assembly, circuit fabrication, all of the above. So let's see what they have to say. Sanmita forecasted earnings per share for the fourth quarter. The guidance midpoint missed the average analyst estimates. They see adjusted fourth quarter earnings from 73 to 79. The estimate was 76 to 82, so that's definitely the lower end. They see fourth quarter revenue 1.7 billion to 1.8 billion. The estimate was 1.9. Third quarter net sales were 1.71 billion. They were at a range of, the estimate was 1.74 billion. Their third quarter earnings, the estimate was 75 cents, and they made 74. So bottom line is that let's see, so they're down $4 right now. We take a look at this. I believe this was probably at an all-time high. It looks it, yeah. So what you're going to have here, close it. You close, yeah. Yeah, this was a test of a high. Couldn't handle it. Let me put this on a monthly for a second. Yeah, it's not an all-time high. This was a lot higher in 2000, of course, 2003. But it was basically coming right up to a place where it definitely could have went topside. This was coming up to a swing high from January of 2005 and just couldn't handle it. We take a look at CDNS. This is Cadence Design. Cadence Design closed at 35. That's trading 35.50. Let's see if they come out yet. Yeah, they came out. Cadence Design, they see third quarter adjusted 33 to 35 cents. The estimate was 35 cents. Here, let me give you the numbers first of second quarter. So second quarter revenue, the estimate was $476 million. They did $479, so it was over. The earnings estimate was 32 cents. They did 34. That's over. They see the year-end year-end revenue. The estimate was $1.9 billion. They see $1.9. The estimate was $1.93 billion. They see $1.91 to $1.95. For the full year, their range had been $1.36 to $1.40. That came down slightly. It's $1.36 to $1.42. They see third quarter revenue at $475 million to $485. That range was basically the same, $476 to $478. They see the earnings. It was 33 to 36. They still see 33 to 35. So they brought that down one penny. Not a huge amount, no doubt about that. Let's go take a look at Woodward. This closed at $68. It's trading at $70 right now. They manufacture and service energy control systems in the industrial engine and turbine business. This baby here. Okay, so the estimate for the nets. Okay, let's see. Here we go. So the estimate was 70 cents to 80. Well, the estimate was 76 cents. They made 85. So big number there. Big number. Net sales. The estimate was 530 million. They made 548. Their sales for the year. The estimate was 2.09 billion. They figured 2.1 billion now, higher. The earnings for the year, they saw 295 to 325. Now they see 305 to 315. Big number. Aerospace makes up 356 million. Industrial net sales is another 142 million. So we're going to continue all week long, folks, with big numbers coming out each and every day. And as I said a little bit earlier, what does happen, no doubt, is that the inside the NDX, that's where a lot of the action is going to be. What we will get out here today, let's go actually look at 3M, because what you had out here today is this. The Dow Industrials are back inside the lower range. Now, a lot of the Dow stocks are coming out tomorrow. You're talking about 3M, $200 stock, and of course the way that the Dow is structured, the larger weighting stocks, it's a price-weighted index. And, you know, when you actually look at the Dow Industrials, there's many of them that are up there in the triple digits right now. So when we come back, we'll take a look at 3M and DuPont. You stay right there, folks. We'll come right back. Dow finished down 66. NASDAQ was up 23. S&Ps were down 3. We're going to right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. And if we go through some of these numbers with Google, in fact, what is pretty wild is that it's actually Alphabet that reports the earnings now, folks. So, Alphabet reported second quarter revenue that met analysts' projections, falling short of the most optimistic estimates, and so the cost of Google ads declined. The company's profit was also hammered by the record antitrust fine from the European Union. Sales, minus partner payouts, were $20.92 billion, in line with analysts' estimates, but below some more bullish expectations. Estimates had ranged from $20.5 billion to $21.6 billion. Google also reported a 23% decline in the average price of its ads compared with a year earlier. That was bigger than the first quarter's 19% year-over-year drop. The total number of Google ads users clicked rose quickly, however, skewed heavily towards Google's own properties like search and YouTube. The biggest contributor to growth was the mobile search, and it's clearly an area where we continue to grow from our underlying engineering strength. That was from the Chief Financial Officer, Ruth Porter, on a call with reporters. Regulators in Europe leveled a $2.7 billion fine in June, saying Google skewed its general search results to thwart smaller shopping search services. The Mountain View, California company disagreed and is considering an appeal. 2 more antitrust probes against Google sit on the European docket, a concern for some analysts worried about the impact on any forced changes to the Google business model. The company accounted for the fine as a one-time dent in profit during the quarter, bringing net income to $5 a share. Analysts were expecting $4.44 a share, including the fine. Bottom line is that they come up with good numbers, and it's trading down. What's going to get intriguing here, of course, is that, when you take a look at Google, and you have the European Union hammering them on the aspect of search terms, on monopoly power. It's only actually, let's look at Amazon for a second. So Amazon's at 1,038. I'm just curious how much. What we're going to do, I want to see how much money Amazon gets out of Europe if they break this down. Oh, so check this out. This is what the difference is. In North America, so Amazon is still not huge in Europe. So right now, Amazon is basically taking in from 35 to 40 billion every 90 days. Out of that, well, let's do it for the year. It'd be easier to break down. So 166 billion for the year. 136 billion they took in 2016. Out of that, 80 billion was from North America. 44 billion was from the rest of the world. So you can see they're not as entrenched in Europe as Amazon, as Google is. So maybe they'll have some more time before the European Union does go after them for that type of monopoly power. I don't expect we're going to see that in the U.S. because the bottom line is that actually, which we'll come across the tape out here today, was the amount of new regulations that have gone in place since Trump has been the lowest since George Bush was president. So the bottom line is that I can't see the administration turning around and saying, okay, no matter how heavy Google is going after them, as Duffy says, no one enforces antitrust in the United States. I can't see it happen. It just doesn't seem to be on the papers. What will be out there, I think, is that picture, you have these large companies fighting each other. Google has been winning the war. There's no two ways about that. The real question is going to be how many of those large companies can get together, get big lobbyists going, throw huge amounts of money behind it, and then start the public relations campaign that, guess what? This is hurting jobs. This is doing that. You get the mantra of it. I do expect we're going to see that happen. What has happened, I was looking at the portfolio loan structures inside the commercial market out here today. And what you do have is this. We know that these, let's go SPG. I'm going to pull up Simon's Property. So Simon Property is the largest owner of malls, Class A malls, this is too, in the country, okay? Now, this equity is down from a price point of $229. You're at $160. As all our habits change, meaning that we are shopping online a lot more, that means that large retailers have to pay less money for real estate. It's going to hurt many of these commercial property owners. Let's take a look at Simon. This was fast on the way down. Looks like last year we just went from 228 to 160. This can get hit a lot heavier. There's not much to basically hold this up, getting out of 147, 133. What was intriguing about the defaults is that there were quite a few defaults larger in Florida, right where we are actually, than in the Northeast. And I'm not quite sure whether we just overbuilt a lot more than the Northeast, because even though, let's say, whether it's Boston or DC, you get high volume, more expensive malls, but what has happened, evidently, they can pay the rents, and they have been paying the rents, versus there's when I say quite a few, there's only 14 in the state of Florida that are beyond 90 days right now. But that's 12 more than they were last year. So percentage-wise, that's a big percentage. None of those, however, were the type of mall like Simon's. They were not all Class B malls, but most of them were Class B malls. And what happens there, of course, is that you only need one or two large companies going out of business. That company goes out of business, guess what? Trouble in paradise. I had been talking about this a long time ago. Sears. Let's go over to Sears for a second. So Sears, folks, okay, is trading $8.40. What has happened forever in this company, this is a Eddie Lambert company. And the key here, Lambert owns 29% of it. Fairlawn Homes owns 26% of it, so they control the whole deal. Well, what has happened here is that, and this happened like last year, Sears spun off, I believe it's, if I get the number, they spun off like 300 and something stores into a REIT. And the bottom line is that the REIT, what's going to end up happening, the REIT is going to end up making all the money. That's how this is going to shake out as we move along in the next few years. So it's going to be really intriguing because when I saw how much Eddie Lambert actually lent the company, it didn't make sense to me when you just first say, okay, he's not going to lend the company that without being secured in real estate. Bottom line, they're going to get their money out of this. It doesn't mean that the shareholder is going to get it out from Sears. He and those two funds are going to get their money out through the real estate. You stay right there, folks. We'll be coming right back. Google was the big number out here today. Google, traded, closed at 980. It's trading at 949 right now. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White has just announced a new online course that he'll be premiering to his subscribers the evening of July 26th, The Next Wild Wild West of Computing. Machine learning will be the biggest growth area for tech companies in the next 10 years. Make sure you're ready to capitalize on that opportunity. With over 50 types of algorithms and growing, Dave White will tell you why there are so many areas for companies to apply this to their business to both sell and consume. Right now, you can get a 30-day free trial to either of Dave's newsletters, Path of Least Resistance and The Technology Insider, as well as get a 30-day money-back guarantee when ordering Timing the Trade charts. Don't miss out on the next Wild Wild West of computing as it premieres July 26th for all subscribers to Dave White services. For all the details and to sign up today, visit the front page of TFNN.com. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
David White has just announced a new online course that he'll be premiering to his subscribers the evening of July 26th, The Next Wild Wild West of Computing. Machine learning will be the biggest growth area for tech companies in the next 10 years. Make sure you're ready to capitalize on that opportunity. With over 50 types of algorithms and growing, Dave White will tell you why there are so many areas for companies to apply this to their business to both sell and consume. Right now, you can get a 30-day free trial to either of Dave's newsletters, Path of Least Resistance and The Technology Insider, as well as get a 30-day money-back guarantee when ordering Timing the Trade charts. Don't miss out on the next Wild Wild West of computing as it premieres July 26th for all subscribers to Dave White services. For all the details and to sign up today, visit the front page of TFNN.com.
Welcome back, folks. We stay with that mall theme, what you're going to see. JCPenney. JCPenney right now, that would be in B malls. JCPenney's trading at $5.09. You know, this has taken a hammering big time. You know, you're talking about in 2007, it was at $84. It's down, and we actually, let me bring this back. Yeah, you're the all-time low on JCPenney right now. Let me see. I think it's $4.90. It might be less than that. $4.17. That was established May 15th. This thing, as our man Duffy was saying, looks like it's going into BK, and there's no doubt that's where it looks like it's going. If we take a look, let's just look inside this for a second and see number-wise. So we've gone from, well, you just know growth. 12.6 billion last year, 12.5 this year. Now, one of the big ones, which is going to hurt the A malls, is Macy's. You know, Macy's trading $22.69. This is a great store that, guess what? Our habits have just changed the whole deal. This is contracting by approximately 10% revenue-wise. Did 28 billion in 2015, 25 billion this year. They're looking at 24.7 billion next year. And, you know, this is going to take a lot of jobs with it because Macy's employs 148,000 people right now. So you're talking big numbers there. Now, there's no doubt what has happened is that as online gets larger, and that's creating a lot of jobs. Macy's gone from a price point of $73. You're at $22 right now. In May, it broke a B point, monster ABC down, broke it with volume. A point on this is 73. Your B is $30, so you're talking about $43, which, guess what? At $43, it is going to go test its high volume low from 08, which is $5.07. Because when you do the number on that, guess what? It's $5 to $3, which is going to be pretty intense. They're already in the process of closing quite a few stores. Now, when that happens, it's going to be whoever can figure out the soonest and the quickest who can replace Macy's inside these large malls. Because most of the time, most of the places where Macy's are, you get some really good malls there. And of course, when you take a look at if we go, let's go over to Bed Bath & Beyond, because Bed Bath & Beyond would be on a B mall. That's trading $28. Let's see when they come out. This is a 52-week low today. Oh, look at this. Did they come out with numbers? No, it doesn't look like they come out with numbers, but bottom line, this is that's another ABC down. That's going south. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right back here, 9 o'clock tomorrow morning. Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
This is TFNN.